Bring on board Sandeep Sarwal, Peter McGuire. We are in conversation with our technical experts, both Kunal and Naresh, as to how should one now approach today's gap down. It is going to be in gap down start. Peter, good morning. 130 on the crude. It turned from 140 last time in 2008, 2009. Are we likely to reverse anytime soon? Because I was looking at numbers. What Russia adds every day, more than 70-80% of that could be mended, provided there is a resolution in place with Venezuela and Iran.
I think there is just so much to build on from your other guests' comments. I mean, these are very unusual times. So we're up $10 in the last matter of hours. We had a peak there of 139, now at 129. Where does it go from here? Has it got the potential to carry a 150? You've got some of the banks, the big analysts are saying you could see a 175, 185. So there's a lot of fear premium built in. There's a lot of risk. There's a lot of bullishness. It's parabolic. These are very dangerous times for a lot of traders. The fortune favors the brave that look at opportunity. And if you've been long over the last couple of weeks, it's been an almighty ride to the upside. And there's a lot of people saying that, you know, with Putin and the way things are with Russia and Ukraine, that this is only going to increase volatility further and push prices up further from here, and demonstrated with US dollar index 99 and gold at 2000.
Peter McGuire, I think, a lot of answers would be now what central banks do next. And I guess that's going to also somewhere dictate the next market move at a global level. Wanted to understand from you whether or not you sense that the Fed is going to move away from its dot plot and perhaps kick the can down the road because, they too are grappling with the repercussions of Ukraine and Russia situation.
I think absolutely. And I think a number of points. First off, you've got inflation sitting in the States, 7.2, 7.4%. You've got the Euro read this week. And everyone was, I think, hemorrhaged from $100 crude. Certainly when it hit 100, the mood had changed. That you could nearly inhale that as far as central banks, because they realised from an inflation standpoint what happens. Now we're sitting at 130. We were at 140 a couple of hours ago. We hit a 139 handle. And where are we tomorrow? So I think any central banker would be saying, let's just maybe kick the can down the road. Well, we may have moved a little bit early in March. They've got to be conscious of two things. First off is, what's growth going to be like? And secondly, if you start raising rates, you don't want to come back and say, oh, hang on a second, we've got to now cut rates, because inflation and possibilities of stagflation, that's the real concern with very high energy costs. And if this is going to run for a number of weeks, if not months, if that's where Mr. Putin takes it, then it's going to be a very difficult situation to manage from any consumer or central banker or investor.